Hello, everyone. Welcome to the market update for Tuesday, May the 3rd. As always, if you have any questions during the week or any that I don't get to in the live class here, make sure you send those to jerry@traderspro.com. Make sure you write that down. If you're new, if you've been here a while, you'll probably already know the email address and probably already correspond with me a little bit. But quick announcement before we get started. I'm going to be out of town next week, but I do plan to do the class. But it's probably just going to be I'm going to just do a recording and then post the recording on the site. So or on the YouTube channel there. So just be aware of that. It's when I'm out of town, my schedule it's not very flexible to fit in the class and make sure I can do it at a certain time. And so I usually find it's easier just to find a time I can do the recording, and then post the recording. And then if you have any questions though after viewing that class, make sure you send that to jerry@traderspro.com. I'll be happy to answer that, or if there's anything I need to clarify, I could do that in the next class. That'll also be the case for the stock-specific class as well. It'll probably just be a recorded class that we'll post next week. All right. A lot going on, a lot of whipsawing market conditions. We've talked about that, but I think it was fascinating yesterday how we danced around this critical support area. I'm going to go through that when we look at the chart here in just a second. Now, before we do that, though, we need to again be aware of the kind of the conditions we're in. We talked a little bit about this in the class last Thursday. That a couple things here. We are seeing now again that bull market indicator continuing to move to the left on these sell-offs. So we're starting to reflect that movement into a bear market. And based on the fact that we were so overextended that it threw off the algorithm. I talked about how typically, you get up here around, 5 to 7 or something would be a very high reading. It would be this very high reading here on the indicator. We got extremely high during this rally, that sharp rally from the COVID lows. And we're just now getting down to kind of the normal levels to start to move this indicator down. So again, that shows you a couple things. It shows you again how overextended the market was, and usually when that overextended, there's usually a backlash to that, meaning there's an opposite reaction. Typically, you're going to get a bigger correction when the correction happens. So I think this is really telling me that we still have further to drop and further to correct. I've talked about this a number of times. Not seeing the panic yet, the selling. I don't know when that's really going to happen. I've told you I'm going to point it out where I think it happens. I'm going to point it out in one of the classes whenever we start to find ourselves in that type of condition there. And even then, that kind of signals when we know we're near a bottom, and it's not going to tell us exactly where the bottom is. I've famously predicted I famously called the financial collapse bottom, and that ended up bottoming in March of 2009. I called it within a couple of days of when it happened. I like to brag to people about that, and I've had a couple others that were pretty close within a couple of days. But I've never been exactly, been able to do it exactly, to the day. This is when we bottom. And sometimes when I have done that too, it wasn't the bottom. We had one more move down, or I was expecting a little bit more selling, and it did end up bottoming at that point and rallying. So again, no one's trying to claim that we can know exactly when a bottom or a top takes place. And I hope that it's important that everyone knows that. I hope everyone realizes that. We're not trying to be psychics. We're not trying to be predicting anything. We're trying to forecast, and we're trying to recognize the conditions that we're in. And so more than anything, as we go through this process, I'm trying to teach you how to recognize conditions, so that when we start to feel like we're near a bottom, that's when we want to, make sure we've got our list of stocks that we want to jump into when the markets start taking off again, or even start to get into some positions. Because from that point, from a reward to risk standpoint, especially in the longer term, you're much more likely over time to be able to make a lot more money than you'll be losing. You're more likely to be right at that point over time. But this does show us that there is some more correcting to do, and I would anticipate we're going to get into this bear market territory at some point in time. Now, once we've started now moving this needle, it could move very quickly. We've already seen it just over basically 2 weeks. It's gone from 5 to 3. So, and that's without that swoosh or that big sell-off that I think is coming. I would not be surprised if we don't end up in that bear market territory when we start talking about being at a possible bottom. The other indicators, momentum has been extreme for a little bit now. We are at the far left side here, so that's indicating the market's oversold. It's due for a little bit of a rally or a bounce. And I mentioned this last week that although I'm expecting a bigger drop to take place, because the market has been in kind of this extreme oversold or close to this extreme oversold condition, I said it wouldn't surprise me if we get one more bounce or one more attempt to rally before getting that bigger move down, maybe even have it move sideways a little bit, chop around a little bit. You don't want to, even though you might have an expectation of what you're expecting the market to do, doesn't mean that you ignore what these signals are showing. And these signals are showing we could get a bounce. We could get a bullish reversal risk. We could see it rally. And by the way, a bullish reversal risk doesn't mean it's going to start a big move up. It could, but it just means that you're at a spot where you could get one of those bounces. And so if you do get one, it shouldn't shock you or surprise you. The breadth has lagged a little bit here, and we showed this on Thursday. It's still high, but it's not in that extreme range. Now, I use this to explain that this could, because it's not in that extreme range, that maybe we could still break through that key support level and get that big sell-off, push all these to the extreme oversold. But since that didn't happen or hasn't happened yet, it's still in an area here where that bullish reversal risk is high. We could get a little bit of a bounce. And that's how I'm interpreting that indicator right there. Sentiment, we are off the extreme. We are still though in that complacency area. I would expect that we need to get into this trending area here at the very least to be closer to a bottom, to get a little bit of that fear showing up in the market, at least some fear showing up in the market. All right, so, and then on the buy-sell ratios, we do have a extreme. The sells far outpace the buys. These will tend to, at this point, start moving closer together. So again, if the market does rally a little bit, we could see this gap kind of close. So this is showing me that we could be due for a little bit of a bounce. Again, these are not necessarily telling you the trend. They're telling you the extreme levels of the trend. In other words, there's indicators that are telling you that you're trending. These indicators that we're looking at are telling us, could we be near the top of this trend or the bottom of this trend? In this case, we've been pulling back or selling off. These indicators we've been looking at are telling us we could be that we could be at the end of this pullback or near this end of this pullback. Now, sometimes, again, that could be just wave A, you get a bounce and alleviates that oversold condition, and then you get one more move down. But we don't want to ignore these, because it's possible. It is possible we could have a bottom here. We could rally up to new all-time highs. We saw that happen a few months ago, where it looked like it would look like we hadn't corrected enough. Looked like we were going to have another move down, but the markets managed to rally back up to new highs. And so, again, we're not trying to be predictors. We're trying to be forecasters. And we want to make sure we recognize what is actually going on, that we don't get locked into these biases to the point where we ignore what's actually happening. Because if we can the quicker we can recognize what's actually happening, the quicker we can take advantage of it and profit from it. And then this sentiment indicator is again down here at the oversold area. This is showing, we're due for a little bit of a bounce here as well. So that kind of sets the stage in as we go in and analyze the charts. Let's take a look at our indexes. We'll spend a little bit of time on this because it's pretty incredible how we've kind of moved in the last couple of days. And you're going to see some familiar points that I keep highlighting. And one, this area again that we've been really, really focused on is right in here. Again, we had this on February, the end of February right here, with this down day, and then we had this big bullish reversal day. Gap down here, moved higher. I know this is repetitive, but there are some new people that are joining, so I want to skip over this, but I also want to make sure those that are new can kind of follow along. But on this day, we closed right here the day before. The next day, we gapped down. We opened down here, but within seconds, we were trading up, meaning there were buyers that immediately pushed the market back up. Pushed it up. We didn't rally much off of that, came back down, and then right at this area, right in that same zone, the buyers came in this day again, pushed it up again. So there were buyers here pushing it up. Didn't last very long, came back down, but in that same area there, buyers pushed it up. And this time we had that rally that lasted through the end of March, through most of March right there. Okay. Yeah, that still didn't end up pushing the markets higher. That was kind of we were viewing that as a bear market rally, or a rally within the downtrend. But then look what happened recently. Last week, what happened? We came down and we hit. Well, what was interesting is last Monday we had a big drop on that Friday before, and then last Monday we had this bullish reversal candle. Looked like we were going to reverse back up, or we should usually get another day where it goes up. I had a few short-term trades that I got into that ended up getting stopped out of the next day, because next day we didn't even open higher. We gapped down and had this big sell-off day. So this was last Tuesday. And look where we closed the day right there. We closed it right at this critical area. And if you remember back then, I said, this is going to be a critical spot right here, because if we push down into this range, if we get into this range and below that range where these buyers are, that's when we could start to see that panic selling, because these buyers were strong enough to push the market up each time. Someone, and I don't know who they are, and it's probably not one person, it's a group of people, but there's somebody out there, a large enough group that can move the market, that believes this is the where the market's not going to go any lower. This is where they believe that they can buy with confidence. And they have been. They've been buying with confidence every time it's been in this area here. And sure enough, we got a bounce off of that. It was kind of a flat day on Wednesday. Thursday, it rallied up a little bit. Then Friday, I thought was a pretty significant day. We sold off, and for the first time since this bullish reversal candle back here, the first time we had closed into that zone. And I really thought that things would start to come unglued at that point. I was watching very closely on Friday, and the VIX did spike up, not to that 40 level that I was saying that we should expect to. I still expect that VIX to get above 40 when we're even starting to talk about a bottom or a panic in the market. And we closed very near the bottom of that zone. And one of the things you hear me say all the time is that markets typically don't bottom on a Friday. It can happen, but it doesn't typically happen. And sure enough, yesterday we opened about where we closed on Friday, and we had this big sell-off down below. Now we were down below the range. This is where I thought, man, this is where we're going to start to see panic kick in. But guess what? As we were trading down there, even though we were down, it was orderly. It was not. Usually when you're in a panic sell-off day, you'll get these spikes. The market will drop sharply. I mean, before you know it, you're looking at a Dow that's was down 200 points, and then you blink and it's down 500 points. Then you blink again and it's only down 300 points, and you blink again, it's down 700 points. It just starts violently going back and forth as traders are now emotionally making their decisions. They're not thinking anything out. They're either selling or they're like, oh, I got to buy right now, or usually it's buying to cover the short position is what's causing the buying in those panic sell-offs. But it's these large whipsaws within the trading day that are very quick and violent. And that's not what we saw. We just saw it was just kind of dropping and dropping and dropping and dropping and just steadily dropping throughout the day. And as we got in, there's a little bit of back and forth, but as we got to the end of the day, we started to see it come all the way back up, and then it went positive, and then it was kind of at the highs of the day, and then it would come back down, and it was actually creating an indecision candle. You remember the kind of a spinning top indecision candle? That's when you have the main body, and then you've got tails on both ends of it. It was when it was down in this area right here, it was a pretty kind of big spinning top kind of candle. So I was waiting at the close to see if that's how it was going to close, because that would be significant that it did rebound, but it's not closing near the highs. There's still some indecision there. And even then, when we closed, we didn't still close at the highs of the day, which you'd really like to see in a hammer type candlestick formation. See, back here, we did close at the highs of the day. That's why I made those trades. I thought, well, we should at least bounce a little bit off of that. But there was still some indecision going into the close. So it was just weird, because it's like I didn't get the panic that I was fully expecting down here when it broke below here. But I also didn't see at the close, I didn't see the buying that was going to catapult us, start a big move higher, at that point, going to launch us forward in some big rally. So we're still just kind of sitting in this critical area right here. And I think it's just still important that we watch this. I think that obviously this emboldened the buyers to have it rebound off of that below this critical low right here. And by the way, I'm not the only one that have recognized these areas. You're probably hearing anyone that knows how to read a chart and it's on, that has an outlet, or is on TV or radio or whatever. Well, I guess it's hard to do technical charts on radio, but anyone that knows how to trade that has a platform recognizes these areas. They're seeing the same thing we are. Okay, I'm not telling you anything unique if you know how to read a chart and you know how to read what's kind of going on. So, but it's interesting that buyers are really confident in this area. They're really saying this is strong support. And it is. It's proven to be strong support. Now, if you're bullish and you're saying, okay, then that's where my bottom is. That's where we're not going any lower than that because of that. And that could be the case. Like I said, we could be rallying up. We could be all the way up here in a couple months and say, well, that's what happened down here. Those buyers, that was the support. That was the near-term bottom or what have you. But if it gets broken again, hopefully you can start to understand how this panic starts to get created. It's at some point, I don't know where that level is. I thought it was right below it. It might be even a little bit further. That's the other key thing is I don't know where the exact spot is where people panic, right? You can see where they've shown you where they're willing to buy. I don't know where that pain level is, how much they're willing to take on a drop. Obviously, it's got to be below here now, below 405. Where they snap and they just start selling. But that's going to be something, that's going to be an area to watch. Next time if we get down below 405, what happens? Does it bounce again off of that? Now, obviously we're up a little bit today, although again, it's kind of a weak rally. Now, got to also remember context here. We got a Fed meeting tomorrow, so it's probably, I wasn't expecting, even if we did, the way we closed yesterday, I wasn't expecting a massive rally today just because of the Fed news coming up. Typically, when you're right before the Fed announce, you get a little bit of indecision. People don't want to make big commitments ahead of what, until they know what the Fed's doing. Now, as far as what they expect the Fed to do, everyone's expecting the Fed to raise 50 basis points, which is a big adjustment. Typically, they don't ever like to go more than a quarter point, but they're behind the curve. They've got to catch up. They're going to be more aggressive. The market's already expecting that. Now, what would freak the market out is if they did more than 50 basis points, like 75 basis points. I think they'd be freaked out if the market only did a quarter basis point, because they really believe the Fed was behind the curve. We could see the inflation numbers. So there's pretty much no doubt that they're going to go 50 basis points. But as is always the case with Fed meetings, it's not necessarily that decision that causes the volatility. It's typically the news conference that follows, what the words are out of the Fed chairman's mouth. They look for, they break apart every syllable. Was he sweating when he said this? Did he blink 3 times when he said something? These people overanalyze every single moment of that. The good news is you don't need to do that or try to figure that out. But what we focus on is, what is the outcome? What do the professionals believe after that news conference and after that announcement? Is what do they believe is going to happen going forward? They'll show you in what they're doing, buying or selling. Now, you always hear me warn you, though, there tends to be sometimes a head fake, a false move after some of these meetings. You'll get you might get a rally afterwards. You think, okay, the market liked that, and then the next day or a couple of days later, you get a big drop, or you get a drop initially. You think, oh, the traders didn't like that news, and then suddenly we rally after that. So, for those of you that want whipsawing to be done with, there could be some further whipsawing this week that we might have to deal with. And lately, we haven't had false moves off of the Fed meeting, or at least not immediate. We've had it extend for a little bit of period of time. So let's highlight then some of the key areas. And since we can't know exactly how the market's going to react to that news, let's look at a bullish side. When do I really need to turn more bullish then? And where would be an area where now we're less likely to get that that sell-off? I'd go back to another area that I pointed out, we've looked at many times, up here about the 428 area. It was support back in here. It was resistance right in here. Remember, that was the day when that was the area where those buyers pushed it up and it came right back down. Buyers pushed it up. And then it broke through. And then here, when we broke back below that area right here, and then it came down to that area where the buyers pushed it up, it came right back to 428 and then came back down. That was that Friday move. This was last Thursday. And so if we rally back up to that, that could still act as resistance and go lower. But if we start getting above that again, we got back above it back here. We had that March run that took off. We get back above that again. We can start to maybe expect that it could rally, or we'd expect it to rally, but we'd be watching for maybe a bearish reversal candle that could show up. Because right here, now this was early in the process where we really hadn't established these zones yet. But here we broke above it, and then it looked like we could start taking off, although it didn't take off immediately. It came back and retested it again. But we got this pretty nice bearish reversal candle right here. And it signaled that we could drop off of that. We did. We came back below that zone. So if we did break out above here, it would lean more towards the bullish side. But I'd be watching to see if you got some sort of bearish reversal candle that could signal that maybe that wasn't going to last very long. All right, so those are the key spots right there to keep an eye on. The other indexes have their own areas very similar to this. You can see the Dow had this. Here's a reversal day right here. Here was that big gap down reversal, right about where it closed. Is about in this area right here. We bounced off of this area recently, and now we're right at it right now. We're trying to break back above it there. You've got resistance up here, so if you break above 340 on the Dow, on the DIA, that would tend to be a little bit more bullish if it can do that. The Qs have already broken below this area right here, and now we're on the underside of it. We're trying to see if that holds on. Does that hold on as resistance here? We roll over. Does it break out above there? Again, up above here, you've got a little bit of that support resistance. I'd say it's like 330, 338. You could say 340 just to give you a round number there. If we get above there, that would be a little bit more bullish. And then the Russell, here's kind of the support right there. And again, we're just on the underside of that. Again, we've got an indecision candle today. Let me draw this line again in here. Indecision candle, at least so far. Remember, these candles can look different by the end of the day. But as of right now, it's showing indecision at this area right here. That's kind of a critical area. And then this is a major area all the way up here on the Russell 2000. This was the sideways movement all of last year. This is the bottom of that sideways movement. We've dropped below it, and then we've tried to rally up to it a couple times, and it's failed. Overall, again, it looks like we're trending downward, and again, that's the purpose of doing all this analysis, is try to figure out the trend of the market and then the significance of the trend and to make our decisions. And it's been about the same in the last few updates, which is that we're not seeing a strong rallying market yet. So we've been spending our time just building watch lists and getting ready for when things turn. We can be prepared for it. Or I've shown you a couple of those inverse ETFs. Hopefully, if you've taken advantage of some of those, the SOXS and the SARK, SARK fund that moves up when the market moves down. So you can still be long the stock, but it acts inversely to the market, so it'll go up when the market goes down. Hopefully you've taken advantage of that. At least you're aware of that. You can use that to hedge your positions a little bit. All right, so let's move on with the other charts. I'm not going to spend too much time on these because they're not the most. They're not our main focus right now. Sometimes they are. Sometimes oil is what we're really focused on because it's moving the markets, or Bonds bonds have been trending down, and the market hasn't overly reacted to the bond movement because it's been in this trend for a while now. It's not freaked out anytime those bond yields spike up again. But again, we did have lower highs, lower lows right here. We did go to another lower low right here. We are getting a little bit of a bounce today. I think this 122 area is significant because that was a pretty significant lower high on this bounce. So if we were to get above that area as of right now, at least off of this low, it could be an early sign of a potential trend reversal. There's a little bit more that we'd have to wait for, but that would be one of the first signs that you would look for as far as breaking that downtrend. And again, it doesn't mean it's broken the downtrend. It's just the first signal that maybe that downtrend could be starting to reverse. So we'd look for that. Now, I don't expect it to. I think this could just end up rolling over and dropping. But if it doesn't, again, that's what we'll comment on that. I'll definitely mention it if I see it in one of these upcoming updates. But that's now an area we could kind of focus on. Remember, during this drop right here, we really didn't have that lower high to focus on. The lower high was up here. It would have taken a big rally to really, go to that higher high for the first time. Right here with the smaller drop, it would be easier to go to a higher high and possibly signal, like I said, that trend reversal. But that's something to just keep an eye on. But overall, the trend is down. We're still considering that the trend, expecting the trend to go lower. We were in this extreme reversal risk. We backed off a little bit here, but we can still end up dropping and moving back into this extreme reversal risk zone. We've done that a few times, and that's important to point out because that's what I'm talking about. Remember when we went through the direction alerts to begin the class, that some of them were in this extreme range. It doesn't mean that we're at a bottom and that it's going to rally all the way back up. It just could mean that we're due for a little bit of a bounce. So much like right here, we're getting those extreme readings. It didn't mean that was the bottom and bonds were going to go right back up, but we did get a bounce, and that bounce, although this was really a weak bounce, didn't go up very much and moved more sideways. But what it did was it alleviated that oversold condition, brought it up a little bit to where now it could go lower again. Now the opposite is what we're looking at here, or no, it's not the opposite here, but with those direction alerts, we're in kind of these extreme areas right here. Maybe the market rallies a little bit, but it may not rally much more than what you see like here. It alleviates that oversold condition, and then market continues to go lower. Question: do you trade options on the SOXS and the SARC? I don't, because typically, if that's just one way to use as a hedge for when the market, when you don't want to use options. Normally I'll buy put options if I expect the market to go down, but there's a lot of people that don't want to get into options at all. They just want to be long the stock. They just want to buy stock. But what if the market goes down? Well, your choice is, if the market's going to go down, is you either go to cash, you don't do anything, or you can use these inverse ETFs where you can still be long. You can buy the shares, but it'll go up in value with the market going down in value. Are there options available on those other ETFs, the SOXS and the SARK? Yes, but there's other better trades that I would want to trade options with if I expect the market to go down. One thing is I'd buy puts on the SPY or the DIA or the QQQ, just trade the index options. Much more liquidity. There's not as much liquidity on those other options, on the SOXS and SARK, and you'll get better prices, better fills, better movement. So it just doesn't make a lot of sense to try to trade options on those. All right, gold. Gold, we've talked about how this is a potential, maybe bullish ABC pattern right here. We could end up going higher, correcting this move up. Now, last week, I was saying the same thing. This could be wave C. But I also said that it still could drop a little bit further off of that. I was just pointing out that could be an ABC. It did drop a little bit further. Now we are in kind of a support area, resistance there, a little bit of support here. Maybe it finds some support, starts to rally. Again, I'm not a big gold trader, but it's definitely pulled back enough to where you could expect it to start to rally. It's in the extreme reversal risk. If you did want to go long gold, this is an area here where you could probably look to consider a trade. You could. I'd want a little bit more confirmation it's going up, but if you got that, you could get in, put a stop down below this area here, and see if you can ride a move up. I think this will have a big reaction with the Fed meeting. Could be up or down, I don't know, but with obviously what the Fed's doing, and gold is very sensitive to inflation. It tends to be a hedge against inflation, so we could see a reaction to gold off of that Fed news. Oil, we're still stuck in this triangle range. We're just waiting for it to break out. I expect it to break out to the upside, which is why I own the USO in the portfolio. Nice little bullish reversal candle yesterday, but kind of a bearish inside day today. It's moving sideways. There's no direction yet. Like I said, I'm in it because I'm just managing risk with it. I have my stop in place. I think my stop is down below here, and I'm expecting it to break out above that triangle, but we are seeing a little bit of consolidation with oil. Oil is another one that's probably waiting to see what the Fed decision is and how it might react to that. The dollar's been really stretched, really overbought. It pulled back a little bit last week. On Friday, we've kind of rebounded a little bit right here. It is stretched, but it looks like it wants to go higher. It's acting like it wants to go higher, but again, you can't ignore that we're in that extreme overbought condition. But the trend is clearly up, and we'd expect that to continue. VIX, again, is important. Again, we just didn't get, here's that Friday sell-off. We haven't even reached the peaks of these previous peaks right here. So you can't, if we didn't have panic selling back here, then how can you call that the panic sell off on Friday? It just doesn't make any sense. We're going to need to get above these levels to at the minimum to feel like we're near a bottom. There's other things I would look at, but that'd be a minimum. And then, you have this bearish reversal candle on that bullish reversal candle on the indexes. That was something I noticed right away. I look at the VIX. Whenever I see a major market move, I'm looking at the VIX. Again, it's important to understand that the VIX doesn't tell you something every day. It's not always helping you in your decision. Don't force it to make a decision, say it's making a decision every day. But that's a pretty significant bearish reversal in volatility. Right when the market index is making a bullish reversal, you would expect that it's not surprising the market was up today and that volatility is coming back down. Now, again, this is not the VIX chart. This is the VIXY, which is the ETF to trade the VIX. If you want to trade the VIX, we're not trading the VIX. We're just using it to look at a chart of what the VIX is doing. The numbers don't line up perfectly with the VIX numbers. I talk about the actual VIX being at 30 as being significant. Well, just to give you an idea, on this pullback, we did get above 30 on this extreme up here, but on this pullback today, the low of today was right at 30 on the VIX. So we're still right at that level of fear. This is when the market is still a little bit fearful. Anything above 30, you're considering the market fearful. But like I pointed out on those charts, we're still kind of that critical area. Do we break to the downside? Do we rally a little bit further? Again, the market's kind of waiting around for probably that Fed news. But if you start seeing that, if you see the market start selling off, you see that VIX really start spiking up again, that's telling you that there's panic starting to get back in. There's fear in the market. Usually fear means selling, so that's usually a bearish sign. Anytime the VIX is above 30, it usually means it's more bearish for the market. All right, chip stocks, again, I think what's significant is, again, we're not really rallying very strong in the chip stocks. We're kind of like the other charts. We're rallying back up to the underside we broke down to the underside of this move. I think that's something else to keep an eye on. Now, AMD reports, I think today, you got NVIDIA. Watch to see if chip, that's always a signal to tell how strong the rally is how strong the chip stocks rally. And so pay attention to that. If you see the chip stocks in general, individual chip stocks or the SMH start to really move strongly, like if you see the SMH have a really strong move and get above here, then you might rally for a few days. I'd have a lot more confidence kind of trusting that rally if the chip stocks are really participating and leading the way, which is why we look at them. They tend to be a leading indicator. Transports are really weak today. They're not really confirming them. They're still right below this breakdown area here. Not really showing a strong rally signal. And again, you're comparing this with the Dow Industrials or the DIA. And some of the cryptos have been pretty weak today. Now, overall, cryptos have been in a sideways range. I've told you to watch this up here. Now, we're getting close to the low point here. I think if we break down below there, that'd be significant in Bitcoin. But overall, we've just been moving sideways. Not much to talk about there as far as that trend. The trend is just sideways there. All right, so that kind of sets the stage of kind of what's going on. What can we do? Again, I don't recommend going nuts with the bullish reversal yesterday and markets being up a little bit today. I wouldn't be surprised if we faded a little bit into the close as well today. But again, keep in mind that Fed meeting tomorrow. Now, the Fed announcement happens at 2 p.m. Eastern time, whatever that time is in your time zone. It's 12 o'clock in my time zone. And then the news conference is usually a half hour later and lasts for about an hour or so. So that is something to kind of pay attention to coming up tomorrow. Now, what are some things we can take advantage of? Well, if we look at energy, oil and energy, this is going to be significant here. And it's the light bulb kind of went off for me on this, but CEIX right here, and there's BTU is another one. We've looked at BTU before, but CEIX, it looks like it's getting ready to break out right here. A little V-shaped correction here. The reason why these are going to be important, these are coal stocks. Now, for the most part, people have been staying away from coal. The whole movement worldwide is to get away from the dirty type energy and into cleaner energy. But the reason why coal is really going to be significant, and I think we're about to see a really big explosion in coal, and I want to get some exposure in the portfolio. Obviously, Russia-Ukraine war, it's having an effect on all the energy markets. But if you haven't been following the news lately, what Russia has done recently is they've cut the supplies of natural gas to these European countries, especially the ones that are viewed as helping Ukraine or helping the U.S. or helping the Ukraine side in the war. So if you take it for granted, I mean, I get cold in the house. I I flip on the furnace, and the heat kicks on and warms up the house within a few minutes, and we're fine, right? Well, that's burning natural gas, and you have this natural gas system, and natural gas, you can transport natural gas, okay, but it's a lot harder to transport. You have to have special, ships to transport it. There's just not enough of those ships right now to get the supply over to Europe to deal with that problem. And so a lot of them are reverting back to coal. Coal's easier to ship. They have a lot of they used to use coal primarily as a heating mechanism, and so they're starting to use that as an emergency type way to deal with the cut of that natural gas. Now, again, I'm not claiming to be an energy expert. By the way, anytime I go off on a topic like this or anything else, take it with a grain of salt, because I'm only an expert in chart analysis and price action and trading. I'm not an expert in warfare, Eastern European economics or anything like that. I just hear things and I just kind of think, that makes sense. I see where that could be a problem. This is why I felt like energy could rally for a while. It's why I felt like aerospace, same kind of light bulb went off. Man, all these people are asking for weapons. Someone's got to make the weapons. Who makes most of the weapons? And we've been trying to trade that aerospace trade, although it hasn't paid off big yet for us. I think it will at some point in time. But this is something like that, where at the very least you're going to see high demand in the near term and trending up for the near term. Why not take advantage of it? Like I said, CEIX is one, and BTU is another one. Now BTU took a little bit of a dive here. That could be a good thing. I mean, it looks like it's kind of had a little bit of a larger correction right through here. And keep in mind too, and this is something that you have to realize that it doesn't necessarily mean that this could that you're going to see a trend that lasts forever here. We are moving into the spring months and summer months where you're not going to need as much heating demand, but there's natural gas that's used for so much stuff other than just heating that the easy substitute for that is coal. That's why you're seeing some of these coal stocks kind of take off a little bit. But I do want to point that out, that don't go all in with every bit of your money on a coal trade just because you think that it has to go up. These things can be fickle a little bit, but this is something to keep an eye on. BTUs pull back a little bit. If it can start to move back up again, go back to that buy signal. CEIX, it looks like it's getting ready to break out. That might be the stronger one out of the two. It already kind of had its little pullback right there. And then just manage risk. I would believe that it shouldn't get below this low. It should break out. Now, it could move sideways a little bit before breaking out, but it should kind of take off there. And I'm going to go ahead. I'm actually wanting to add this to the portfolio, so I'm going to go ahead and do that real quick before I forget, before I run out of time. So I'm going to put my stop down below this low right here. And what's also nice about this is it's also not quite at the, here's kind of the breakout area right here. So there's resistance. It kind of dipped a little bit below it here. But I kind of want to get it down below that low. Now, because that's a little bit of a wide risk. I tell you what I'm going to do. I'm going to cut that risk. So here's this intraday low from yesterday. That'd be really tight to put it there, but I'm going to see if I can put it right at this previous breakout area. So let's put it at 41. Now, there's no perfect place to put a stop loss. Okay, I want to point that out. I do have a training on this. If you go to the YouTube channel and look for trade management under the Traders Pro page or Traders Pro channel, I try to put a stop loss at a point where I know I'm probably wrong. Sometimes. And that can mean, that could be different places. I definitely know I'm probably wrong if it drops below here. At this, using a stop right here at about 41, I maybe don't know. I know I'm wrong at that point, but I definitely don't feel like I want to be in it at that point. So, you know, ultimately I could still end up being right. It could hold the support area and go up. But the way this is looking right here, it should be breaking out of this soon if it's going to break out. And like I said, it's got the fundamental reasons to break out here. So if it doesn't, then I'd have to wonder, maybe they don't need coal for the summer. Maybe it isn't as high in demand as I thought it would be. So I'm going to put my stop there at 41. Go ahead and add it to portfolio. Stop price at 41. What would 100 shares be? 100 shares would be about 5,000 in the trade. We could do a little bit more than that. Let's do 150. That's probably about as much exposure I'd want. So I've got about 7,300 into the trade. That's not what I'm willing to risk, though. If I get stopped out, if it goes down to 41 and I get stopped out, I should lose about $1,200, which is about 1.13% of the portfolio. I'd like to keep that typically between 1% and 1.5%. I don't want to go above 1.5% risk in any trade I'm getting into. Doesn't mean I can't end up with that. Sometimes you'll get a big gap down, or that you came out of nowhere. But I want to try to keep my risk in that 1 to 1.5% range. So let's go ahead and purchase this. That gives me a little bit of exposure. There's a comment here. CEIX just announced earnings this morning. Well, that's another reason to be positive, because it actually is moving up off of that earnings. It did report earnings, so that's a bullish sign that it gapped down on earnings. So it looks like it should continue to move up then. All right. What are some other ones? One sector I thought was interesting, because there's a lot of these stocks that people know, is under consumer staples. You've got Hershey Foods right here, 92 strength rank. HSY is a ticker symbol. Look at that. It looks like it's pulled back a nice little ABC pattern. That's like textbook. It's about a 50% retracement of that move up. It's pulled back to the breakout area right here. Now that's a big down move. That might have been an earnings report right there too. But it's had a little bit of a bullish inside day. Not the strongest bullish move, but you'd watch to see if it can find a little support here. You're not looking to get in right here. You're waiting for this to go back to a buy signal. If they can go back to a buy signal, it might continue that rally. That's a nice looking chart there. A lot of these are nice looking charts out of that sector. That's why and their names you're aware of, which is why I'm kind of focusing on it right here. Another one I saw, Tyson Foods, TSN, 90 strength rank. Again, what you do definitely want confirmation, because this looks like a ABC pattern right here. Wave A, wave B, wave C. But this was dropping today. So you'd want to, and you're looking at about a 61.8% retracement of that move, not you're a little bit beyond 50%. So this would be, you'd want to find some support here and start moving up, but you're waiting for it to go back to a buy signal anyway. So if it keeps dropping, you don't care, you're not in it. But that one looks like it could find some support and move back up. A couple of these are a little bit below 90 strength rank, but the fact that they're named companies, they're solid. They're not likely to go away tomorrow or anything like that. So, Coca-Cola, obviously, 88 strength rank is pretty high for this stock. So I'd be fine with that. You can see, again, nice run up right here. It's a nice possible ABC pattern. It's pulled back to its breakout area right here. Does it hold in here and move up, go back to a buy signal? I mean, this is stuff I look for all day long. I mean, that's what I'm just saying. These are good patterns here. These are nice pullbacks. Again, not ready yet, but this is what you're doing. You're building your list of what you can jump into when the market does turn and you are confident to jump in. In fact, let's put a few of these in our watch list. I'll add the other ones back in the watch list too. I just don't have time to go back and do that. But another one, Procter Gamble. That's a little bit of a deep dive right here, but again, possible ABC pattern. You got this little V-shaped move right here. This can go back to a buy signal. You got this, you got a bowl-shaped move right here. Maybe a little bit of a cup with handle formation. If it can break out, if it can really break out here, that'd be huge, because the rule of thumb is if you have kind of these bowl-shaped moves and you break out of it, the rule of thumb is you take the distance from the top of the bowl to the bottom of the bowl and you project that upward, and that gives you kind of a minimum expectation of how far you think that stock could go. Now, doesn't mean it's going to go immediately that far. It could take several months to work its way up that far, but this is a very bullish looking pattern right here for a longer term type trade. So just be aware of that. All right. Oh, we have someone that's up 54% since March trading CEIX. Good job. That's always a good feeling. And from what I just showed you, you might want to just continue to hang on to it. Let it go as far as it wants to go. All right, that's all I have. Have a great week. We'll see what happens in this area. We'll see what happens with the Fed, and we'll see you back here on Thursday for the stock-specific class. Bye now.